Cracks are forming in Australia's latest housing boom, and the signs are impossible to ignore. Growth has stalled, and prices in some capital cities are already sliding. The market is losing steam and fast. This could be the calm before the storm as the housing frenzy over the last couple of years begins to unravel. So brace yourselves, because the stage is set for house price declines to accelerate across the entire country. I'm Biko Konstantinos, and that's what we're going to talk about today. What looks like blue paint but smells like red paint? Blue paint. And you know what's better than watching paint dry? Watching my content. It may not be much better, but what have you got to lose? So please like this video and subscribe if you haven't already. I'm here to keep you updated on the big stuff that affects your everyday life. Now, why could the Australian housing market be about to topple over?
Well, it's the news buyers have been waiting for. House prices have fallen in half of Sydney.
Growing numbers of Victorians are struggling to sell their homes, with buyers becoming increasingly choosy.
House prices are being slashed across Queensland, with new data revealing the rate of discounting is ramping up.
Now, we're definitely seeing a shift in the housing market as the latest boom comes to an end. Ever since the pandemic, we've seen crazy speculation enter the housing market. This has seen houses rise in value by ridiculous percentages, the sorts of rises you'd expect to see on a very risky stock, and not on something so important as shelter. But the thing with a risky stock, yes, you might make 50%, but you could also easily lose 50%. But there's no way on God's green earth that Australian house prices would ever be allowed to fall that much.
No freaking way.
You don't bite the hand that feeds you, and in this case, you don't kill Australia's golden goose. So yes, growth has stalled and we're starting to see some house price declines, but let me make one thing very clear: it's not good for buyers. House prices in Australia are insanely expensive, and if you're renting, it'll take a miracle to save up the deposit, and if you're lucky enough to do that, your mortgage amount will be astronomical and your repayments will be through the roof.
The Williams family is packing up, ready to start a new life in Brisbane. Problem is, their 5-bedroom luxury home is languishing on the market. It was listed last month and so far, nothing.
Now this is very telling because in the heart of the boom, property like those were getting multiple offers straight away. It's in Victoria, which is actually the first housing market to topple over and see widespread house price declines. The other really strange thing about Victoria and Melbourne properties is that they really didn't rise much after the pandemic, especially compared to other major capital cities. So Melbourne property investors have been the biggest losers across the entire country because not only were property gains muted, they've also been the first to fall. If we look at Melbourne, we can see that some suburbs have seen significant declines just in the last quarter. We've got Albert Park falling 9%, South Melbourne falling 8.6%, and Port Melbourne falling 8%. Now, yes, these are expensive suburbs and the percentage declines are often more, but that's where the biggest declines normally start, at the higher end, but then start filtering through to the rest of the market.
The days on market have definitely blown out to what they used to be. Typically, you're anywhere from 45 to 90 days, just depending on the expectation and where the property is located.
Yep. An increased number of days listed is one of the first signs of a slowing housing market. When everything was booming, you'd see a sold sign after the first week of listing. But now across Australia, we're definitely seeing properties stay on the market longer, and this is a clear indication that overall demand is diminishing.
SQM research finding Melbourne's listings have surged 12% in the past year, with old listings up 11%. That's around 8,000 properties left lingering for more than 180 days.
This is another huge change. After the pandemic, housing listings were abnormally low compared to the average. This meant there was less stock to choose from, and when you combine that with crazy speculative demand, it sent house prices through the bloody roof. But now, several years later, listings seem to be returning back to normal, and that's a good thing because it eases some of the pressure on buyers. Because when there's more stock to choose from, there's less buyers competing for each individual property.
Distressed sales are up dramatically, with cash-strapped sellers desperate to get out after so many interest rate rises.
Now, overall, distressed selling in Australia is still quite low, but it's definitely been increasing. And I think that's because pandemic stimulus combined with extra low interest rates created a savings bonanza for many property owners. But now, after so many interest rate hikes combined with high cost of living, a lot of those savings have all run out.
A client of mine that might have had an interest rate that might have been sitting around $4,000 a month has now gone up between 9 and 10.
This is absolutely the case for those with large mortgages. When interest rates were cut to near zero, almost everyone could afford the repayments. But now that Australia's cash rate is sitting at 4.35%, the massive increase in repayments will be too much for some people. And that could include both investors and homeowners. So even though interest rates aren't going up anymore, excess savings have run out, cost of living keeps going up, and that will continue putting more and more people under distress, which will lead to more distressed selling.
While the average Sydney house price still sits at a record $1.6 million, in the past 3 months, property prices have fallen in half of Sydney's suburbs.
This is big because Sydney's Australia's bellwether housing market, and it's often a leading indicator for the rest of the country. So house price growth in Sydney has completely stalled, and we're starting to see a large increase in house price declines.
The biggest drops in Manly, Clovelly and Bondi, where the cost of an average home fell by around $300,000. Big falls also seen in Fairlight, Darlinghurst, Narrowena and Lewisham.
Here's Sydney auctioneer Tom Panos giving his reflections on the current state of the market.
I'm seeing result after result of properties selling significantly lower than what they could have got a few months ago. This is officially a buyer's market.
No, it isn't officially a buyer's market because sellers still have most of the power. The only way we'll really see a buyer's market is if sellers become desperate to sell and there's very few buyers making any offers. That's a real buyer's market, and that's when prices can actually crash. But the last time I looked, house price crashes are actually illegal in Australia.
Fresh data from CQM Research reveals Queensland has more than 1,600 distress listings, homes which are priced to sell urgently. That's more than anywhere else in the country.
Queensland has seen insane house price growth since the pandemic, with some areas even doubling in price. However, now we're finally starting to see easing of that price growth and falls in some areas.
It means the price of most of them has been reduced, in some cases by more than 30% or by hundreds of thousands of dollars.
Now, demand is still very strong in Queensland, but it could be the next state to see widespread house price declines after Melbourne and Sydney.
Experts say a major reason for the discounting is uncertainty around when the Reserve Bank will cut interest rates.
This is an excellent point. Many Aussies were expecting interest rates to be cut this year in 2024. However, now that scenario is looking less and less likely, with NAB now forecasting no rate cuts until May 2025. This could push some investors or homeowners over the edge who've been just hanging on, desperately waiting for a rate cut. One of the biggest signals that house prices are about to decline is weak auction results. Since the pandemic, we've seen ridiculous demand at auctions, often sending prices way above the reserve. And that's because there was so much demand competing for each property. But Tarek Brooker has been monitoring auction levels in Melbourne and Sydney, and for the past 4 weeks, results have been extremely weak. So in our two biggest cities of Sydney and Melbourne, we've seen a strong increase in property listings, and we've seen continued weakness in auction results. We're also starting to see a sharp increase in listed days on the market. In addition to these warning signs, economists are now starting to predict higher inflation for the US and Australia going forward. This could mean Australia may not see any rate cuts until the middle of 2025, or even more shocking, we may not see any cuts at all. That would put significant downward pressure on house prices for two reasons. One, there'll be more distressed sellers who can no longer afford their mortgages and have to sell. And two, home buyers just won't be able to loan as much money due to the high interest rates. But when sellers want this price, but homeowners can only afford this price, the sellers will have to reduce their prices to meet the buyers, which is something they haven't had to do over the past few years due to the ridiculous, insane speculative demand caused by policies that have put a rocket under house prices. So the tide is shifting rapidly for Australian house prices, and house price declines, which have been led by Melbourne and Sydney, look like they'll spread to the rest of the country. Australian house prices may just be gearing up for an ultimate smackdown. I'm Biko Konstantinos.